Hi there, welcome back. You're still watching Market Fatafat on ET Now, a show where we're going to take you through all the big buzzers in today's trade. And well, let's shift focus and talk about a stock that's not doing well for itself in trade right now and is losing away, in fact, in the negative territory. And I'm talking about Zydus Life, because Zydus Life fell nearly 3% and actually continues to build onto those losses, because even as of now, 4.5% lower is where that stock is right now, and this is after a US federal judge ruled in favor of Exelixis Inc. in a patent dispute over Cabometyx, a blockbuster cancer drug, and this is what we are understanding from agencies. Now, MSN Laboratories, which had partnered with Zydus Life Sciences, conceded that its generic version of this drug infringed on the 3 of Exelixis' patents, and as a result, MSN will be blocked from launching its generic version of the drug until the patents expire in January of 2030. In a major setback coming in for Zydus Life, this ruling means that MSN, its partner, will not be able to bring the generic cancer drug to the market as planned earlier, and the court's decision upholds the validity of key patents protecting this drug, dealing a blow to Zydus' partnership with MSN in this product line especially. On the back of this news flow, the stock is lower by 4.5%. But let's shift focus from a news flow and talk about technicals now. And on the technicals, I'm being joined by Vaishali Parekh, the Vice President Technical Research at Prabhudas Lilladher. And Vaishali, thank you so much for joining us on the show. The first stock that you've picked out for us is HAL. Now, a lot of these defense stocks have seen a run-up in the past few months, but do you think this rally is sustainable going ahead, or can we expect some of these names to fizzle out, and what are the levels that you are spotting on the chart for HAL?
Hi, very good afternoon, all of you. So yes, as we see it chartically also, it's showing a lot of strength. HAL, I think now it's coming in a support band of 4,400. It's just come out of its consolidation, but yet a little bit of retracement cannot be ruled out. So 4,400 acts as a good support, and from here on, if this rally and momentum continues, we can see a target of 4,850 to 5,000 from here on. So I think these are appropriate levels to start buying this stock.
The levels that Vaishali is spotting on the chart for HAL. Jinai, coming to you, you've picked out BSE. This is on the back of a brokerage note. Tell us what the note entails and why the stock is reacting the way it is.
Well, definitely BSE will be in focus, as we have a note by Jefferies, who have downgraded the stock to underperformance rating. Earlier they had a hold rating, and they've actually hiked the target price to rupees 3,500. Now, what they believe is that the recent run-up is fueled by the hopes of market share gains. If you look at the stock price over last 1 month, it has gained over 25% itself, and they believe that this assumption of a large market share gain might be over-optimistic. What they believe is that valuations is already factoring in large gain for BSE or a strong bounce back in the market volumes of their exchange. They believe that the market is not capturing the near-term risk or the medium-term risks, and they believe that the valuations is now running ahead of optimism. Due to all of this, the risk reward now has turned unfavorable, and that is why they have come up with a cautious note on BSE. If you look at currently, the stock is down about 3%.
Okay, so that's the note coming in on BSE from the brokerage firm, and well, it's a sell rating, so the stock is also acting in tandem. But Vaishali, you've picked out L&T for us on the charts. Now, when I pull up the last 6 months or the YTD chart, absolutely flat returns. The stock hasn't done anything at all. So do you think after this consolidation phase, now would be a good time to expect some run up and buy into long positions or fresh positions when it comes to L&T?
In the stock in a lull for a very long time, and today morning also we were saying that there was some momentum taking place. So I think this is a good level to start buying, because once it moves above 3650, it would get into a good trend. So technically I think it's a good level to start buying this stock.
Good time to buy. L&T is the word coming in. Let's move on. Talk about Voltas today, and this is also on the back of a brokerage note coming in from Morgan Stanley, where they've upgraded the stock to an overweight rating and have also hiked the targets. Now, this upgrade to the overweight has come from an equal weight rating earlier, and the target price has been hacked to 2,035 rupees from the earlier 1,225 rupees per share. Now, Morgan Stanley says that they expect 21% earnings CAGR over FY25 to 27, driven by strong volume growth in the UCP business, and they're also seeing moderate margin expansion. What they believe is that the worst is likely behind for the project business now that Voltbeck has also turned profitable. So positive note coming in from Morgan Stanley on Voltas, and the stock is up 4% as we speak. But let's move on now, and Vaishali, you've picked out HDFC Life, a stock that reported its earnings yesterday. Now the street has reacted and has given its verdict on what they made of the Q2 numbers. We also have multiple brokerage notes coming in, but what is your point of view? What are you spotting on the charts when it comes to this stock?
So I think, once the results are out, we are seeing a little bit of a lull, but I think chartically the long-term trend is very intact. And after making a double bottom at 700 levels, it's now trying to surge high. So I would say 700 acts as a very good support, and the stock is likely to go towards 745 to 760 in the near future.
So 745 to 760 on the upside for HDFC Life, but after posting a weak set of Q2 earnings, Vibha Padalkar, the MD and CEO of HDFC Life, says that the focus is now shifted to VNB growth. She also added that the value of new business will grow at 15 to 17% here on. Let's go across and listen into what she had to say.
The value of new business will grow. I've said before, at about 15 to 17% growth, and we have demonstrated about 17.4% growth in H1. That will also continue. Reason that will continue is that is what will add to our embedded value and will over a period of time unwind to cash. So these will become real profits. So it is important that the quantum of profits is something that we don't say no to because we are tethered to a new business margin. Third will be the new business margin, which will be an outcome. At the same time, I'm not saying that it will be in a free fall situation. There will be a floor to new business margin, but maybe 100, 200 basis points or in that kind of a range. As long as we are growing on value of new business, that's going to be the focus. Last point I want to mention is a very interesting factoid, and that is of the new customers that, or rather of the customers that came on were onboarded in H1, 70+% were new to HDFC Life. Now, if we say no to them just because I'm tethered to a particular margin, then those customers are going to go elsewhere. So customer acquisition as a strategy so that down the line I can upsell and cross-sell to those customers also is equally important. So to summarize, top line growth followed by value of new business growth and then new business margins.
Okay, so that's the word coming in from the management of HDFC Life. But Jinay, moving on, you've picked out HDFC AMC, also another earnings candidate yesterday, but we also have the brokerage verdict coming out. So tell us and take us through what these notes look like.
Well, yes, definitely. We have two brokerages notes. Starting up with Jefferies, they have maintained their buy rating but have hiked the target price to 54.50. Now, what they believe is that yields have upstake from the commission rationalizations. Also, it was operationally strong Q2, but there was an offset which was due to the tax regime changes in the company, which impacted the EPS growth. Now, the companies, Jefferies believe that the market share improvement, even as the industry flows have remained elevated. Also, they have raised their estimation by about 4 to 8%, factoring in higher AUM and higher market share for the companies. We also have another note by CLSA who have actually upgraded to outperformance rating with a target price of 49.20. Now, what they believe is that AUM growth was far ahead of expectations, and that is why they have lifted their EPS estimations by 5 to 9% over next couple of years.
Okay, Jinay, thanks so much for taking us through that note. Vaishali, you've picked out ABB on the charts. Now, last 1 year itself, this stock has performed brilliantly and has doubled its share price. Do you see this momentum sustaining even going ahead? Do you think there are more upsides that the stock can scale, or is it time for some slowdown now?
I would not say that, because overall capital goods on the whole are doing very well. And then when we talk about ABB, it's currently at a previous high of 87.80. So that could act as a little bit of a resistance. But once we see the stock moving above this, I think it's ready for a next target of 9,000, 9,500.
Alright, well, on that note, we'll slip into a very short break on this edition of Market Fatafat. But as we do that, should investors hit the subscribe button on the Hyundai IPO or wait till it lists? We caught up with multiple market experts for their take on the latest offering on Dalal Street. Let's go across and listen in to what they had to say.
Consider maybe Tata Motors, M&M, and Maruti. So Tata Motors has a JLR as a leg, which is the largest of the pie, and for M&M, it's largely the tractors and some of the parts which comes into play. So I think we really don't have much of a choice when is kind of a direct comparison to Maruti. And some of the positives which stand apart for Hyundai vis-a-vis Maruti has been the higher share of SUV sales, the higher margins that they realize, and as well as the greater share of export that they do. Hyundai is an option. You can see a good amount of shift happening from institutional side from maybe Maruti to Hyundai. Even they have a superior product slate, their margins, the return ratios are better. So I feel it is here for a good term, and it's a decent issue to subscribe to.
So I think it's a decent stock for a long term. No excitement, nothing immediate what we are seeing with IPO. So there's no compulsion to subscribe to an IPO. I would be happy if I get it a little cheaper from current, let's say 25, 26 times. But overall, I think a very steady company with a realistic expectations. If you have, you may add in the portfolio. One good thing, however, is that it's probably the only player which is strong in each powertrain. So you have the IC platform. They are launching 2 CNG variants this year. On EV, they already have 2 models, which is Ioniq and Kona, and they probably will come with Creta EV, which I think Creta has been one of the best-selling UVs, and if they can come up with a nice EV variant, that can give a bit of a fillip to the numbers.
With the capacity increase now in the pipeline, new EV models which are being planned, I think if you look at say medium to long term, the issue continues to look attractive. But given the fact that it is coming at around say I think 25, 26 times trailing, so it's not a very cheap IPO. But I think for the investors who are ready to take say medium to long term viewpoint, they will definitely end up making money. So
Hi there, welcome back. You're still watching Market Fatafat on ET now. Let's keep it going with all the stocks in focus now. And Jina, I'm going to come to you. You've picked out Aditya Birla Real Estate. Take us through why the stock is in focus today, and I believe it's on the back of a brokerage note. So tell us what the note entails.
Well, definitely we have a Nomura initiation on the stock with the target price of 3,700. Now what they believe is that all the ingredients are in place for the company to rank them among the top 5 real estate players in India. What they believe that the cumulative GDV, that is gross development value, for the project pipeline stands at 90,000 crores, and they're expecting a pre-sales growth of 87% in FY25, and on top of that a growth of 33% in FY26. Making this a strong, disciplined and quality business development, which gives them a further visibility for the future pre-sales and margins guidance. What they believe that the company's support from the paper and pulp segment is unlikely in FY25, but if there's a turnaround in that business, we could see an additional tailwind for the cash flow of the company. They also believe that the management could actually see for a demerger for this segment in coming years as well. And on back of this, currently if you look at the stock is currently gaining about 1.7%.
Okay, so that's the news flow. In fact, the brokerage note coming in on AB Realty. But before I talk about another gainer today, Sterlite, let's just quickly mark what the Nifty is up to right now. And it has crossed that 25,000 mark once again. It's at 25,015 thereabouts right now, just with cuts of 0.1% right now. Let's see if by the close of the trading session, another hour and a half to go, let's see if it can hold and sustain onto these 25,000 levels, because we have been majorly under the 25,000 levels since the start of the trading session. Remember yesterday we started with a gap up open of 25,200, but towards the end of the trading day we fizzled all of those levels. Today also we've opened below that, so let's just see if Nifty manages to hold above 25,000 as well. Sensex, however, let's just pull up Sensex quickly, because Sensex also is very close to scaling 81,700. It was above 81,500 when we started the show. 81,700, very close to that level as well. Just 0.1% cut coming in on this front. So in fact there has been a recovery coming in. There's a 0.4% recovery both on the Nifty and Sensex as well. You have the broader markets also 0.5% recovery coming in for the mid cap index, and 0.4% recovery coming in for the small cap index as well. So seems like markets are recovering, but let's just keep our fingers crossed and see if this actually continues by the end of the day. But Let's shift focus and talk about a stock in focus, and that is Sterlite today. The firm has announced its foray into the artificial intelligence-led data center segment with an integrated optical portfolio. The company has officially entered the AI-led data center segment by showcasing its comprehensive range of integrated optical cable connectivity and interconnect offerings at the India Mobile Congress 2024. Now, the Union Telecom Minister Jyotiraditya Scindia, he also inaugurated the Make in India AIDC portfolio as well. And on the back of this new segment foray into the whole data segment space, the stock is doing pretty well. Sharp spike also, in fact, coming up around that 11 a.m. mark for the stock. 3% higher is where the stock is right now. But let's shift focus. And Vaishali, another stock from the capital goods space you've picked out for our viewers, and that is Cummins. Tell us, what are you spotting on the charts?
If you see today, it has been a day whereby we saw good momentum coming in all these stocks. So Cummins once again, out of a brief consolidation and some profit booking, it's back on track and is trying to get into momentum. So I would say with today's lowest stop loss, this stock can be considered and look for a target of 4150.
Alright, well, moving on then, let's just shift away from the markets for a bit and talk about Akasa, because Bengaluru-bound Akasa flight has declared emergency after receiving a bomb threat. Flight charts way back to Delhi with 184 passengers on board, and following security protocols, the carrier's emergency team has advised the pilot to fly back to the Indira Gandhi International Airport in Delhi with abundant precaution. So that's the news update coming in on Akasa flight. And remember, over the last couple of days, we have been hearing a lot of bomb threats coming in for various airline players as well. But let's shift focus back to the markets and talk about the entire telecom space that is in focus today, the likes of Bharti Airtel, Vodafone Idea, and this is on the back of a brokerage note coming in this morning by HSBC. For Bharti Airtel, HSBC has upgraded the stock to a buy rating from a hold rating and also hiked the target price to 1,950 rupees from the earlier 1,325. So that's a big hike in target price coming in for Bharti Airtel, and the stock is also holding up 1% higher. For Vodafone Idea, however, they've maintained a reduced rating but have very marginally increased the target price to 7.1 rupees per share compared to that 7 rupees earlier. However, 2% higher is where Vodafone Idea is as of now. The home broadband key growth driver is looking to be a good space with a US $7 billion TAM by FY30 is what HSBC believes. They also believe that mobile ARPUs are all set to rise, and they expect the next tariff hike of 10% coming in sometime in FY27. So, well, you have Bharti Airtel and Vodafone Idea on HSBC's radar today, and both the stocks are gaining in today's trade. But let's shift focus now, and from telecom, let's talk about the pharma space and Dr. Reddy's Labs. In fact, the diagnostic space, Vaishali, you've picked out Dr. Reddy's Labs for us. Tell us how the stock is forming on the charts and what patterns are you spotting? What kind of levels also are you spotting for our viewers?
Typically, I would say long-term trend is very intact. It has retraced quite well, and now I think nearly it has made a double bottom, like nearly at the levels of 6,500. So this would act as a good support. And today, what we are seeing, there is an attempt to get into new round of momentum. So I would say risk-reward ratio also works out very well over here, and we can look for a target of 7,000 because that was what the previous high was. So I think in all likelihood, Dr. Reddy can retest the previous high.
Okay, so positive outlook coming in on Dr. Reddy's Labs as well. Janai, let's shift focus to real estate. Take us through why you've picked out Godrej Properties for our viewers, because the stock is holding up with gains of 2.2% right now. So tell us what's driving this.
Well, so the company earlier reported that they have emerged as the highest bidder for 3 adjoining plots in measuring about 6.5 acres across MMR region. Now, the land parcel is located in Kharghar and that will have a combined revenue potential of about 3,500 crores is what company reported. The Gaurav Pandey, who is an MD and CEO of the company, said that their entry into Kharghar micro markets aligns well with their strategy of strengthening the overall portfolio across the key real estate market in India, and on back of this the stock is currently gaining about 2%.
Okay, well, so that's the reason Godrej Properties is gaining. Before we move ahead, just quickly want to come back to the markets once again. You can see Reliance on the ticker, a very smart recovery coming in for Big Boy Reliance right now. 1.7% higher, in fact, and this is also what has helped put Nifty or scale Nifty above that 25,000 mark once again on an intraday basis. A couple of sectors as well, a 1.2% gain from the day's lowest point coming in for Nifty Realty as well. This sector has also trickled in into the green. Nifty Energy also 1% gain coming in right now, and this sector has also shifted from the red to the green. But while we are talking about Reliance, Big Boy Reliance has hit an 8-month low and has been the biggest monthly decline. In fact, it has seen the biggest monthly decline since 2022. But what are the factors that are ailing the stock? Let's go across and listen in to Nikunj Dalmia's take on it.
Breakdown in Reliance started, I thought it was more like a country call which some ETFs have taken, and they were selling Reliance down and India was going down because of that. But one is getting a sense that there seems to be a specific view on Reliance which institutional investors are taking now. The view on Reliance cannot be just, Reliance is such a large stock that for the stock to go up or down, it cannot be governed by retail folks or by HNI investors. It really has to have of cyclical downgrades. These are earnings downgrade which in a sense have been pulling the stock down, which is nothing great has come out from their their old economy business. We call it as the O2C business. Geo seems to be stalling a bit. Retail, one bad quarter, one good quarter. Nothing big has come in terms of where the company or where the business is headed in the near term. The new energy business, while the option value of that is not out, but nothing new has come in that also. So I think that's the way how Reliance has moved in the past. It goes into this hibernation and then it tends to come back once clarity comes through. But I think in the near term, I think it's the institutional view which could be linked with the earnings call, which I think is evident, which really explains that why markets are down. So let's look at that data from 27th of September. Why are we insisting on 27th of September? Because that was the time when markets were at a record high. So Reliance has single-handedly taking the markets down, or 30-40% of the carnage in the Nifty has happened only because of Reliance. So I think it's a stock specific issue here where institutional investors are saying what are the triggers in the near term, and that in a sense is having impact on the stock. So first I thought it's like, okay, someone's taking a view on India and then India specific ETF selling has come out where Reliance was in heavyweight. But I think it's more like a stock specific cyclical downgrade concern which is biting the stock.
Okay, on that note, it's a wrap on this edition of Market Fatafat. Thank you so much for watching, but you stay tuned to ET Now because closing trades takes all the action forward.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits and then break right through them. Become something more. It's my time to rise.